Hello everyone. Hope everybody is doing good. Yes. So in our previous class, we saw this problem. We are continuing. Okay, just a quick recap. In the previous class, we were solving illustration number 3. Just hold on for a second. I think it's little bit blur. Yeah. So in our previous class, we were solving illustration number 3. So basically, what they had given in this problem, they had given you 2 to 3 adjustments. One was basically your adjustment with respect to your sale of asset. Second one was with respect to your change in the method of depreciation. Change in the method of depreciation for existing asset, right? So these two things we saw. Now, in the previous class, we calculated the loss or gain on sale of asset. One. Then second, we even saw how to find out the original price or original cost of the asset, right? So we found out what was the loss. Then next what we did was 4,86,000 was the total WDV of the asset, correct? So this is WDV including the asset which is sold, correct? So if you want to find out, this WDV of 4,86,000 includes both, that is asset which is already being sold and the asset which is being continued to use in our business, correct? So 4,86,000 considers both, right? Now this is after depreciation of 2 years, right? That is 22-23, then 23-24, correct? So here there was one value, on that we charged depreciation, again we got one value, on that again we charged the depreciation, thereon we got a closing WDV of 23-24, which will automatically become our opening WDV for 24-25, right? Yes. Now earlier we were doing the depreciation based on WDV method or reducing balance method. Now they asked us to shift from WDV or reducing balance method to straight line method. So understand one thing, when it comes to WDV, the depreciation works differently, correct? Say for example, I purchased an asset for 100, 10% is the depreciation, then how much will be my depreciation? It will be 90 is WDV and 10 will be my depreciation, correct? Now second year what will happen? My WDV will be 90, this 10% will be applied on 90, that is the method followed under reducing balance method or WDV method, correct? That means the depreciation rate is applied on the opening value or opening book value of the asset. Book value is nothing called as written down value of the asset, Correct? Yes. So here it was again 81 rupees is WDV, 9 rupees will be depreciation. So this continues. In the same way, now what has happened is there was asset X, 10% applied in the first year. Again, there is X, then 10%. Like that, it kept on going. So after like this, we have got a figure like 4,86,000. We have arrived at a figure called as 4,86,000. Now, what happens is, suppose, let's take this example only just to make you understand better. Now, from third year onwards, let's say from WDV, we shifted to SLM, straight line method. So under straight line method, what do we need? We apply the depreciation, we apply the rate of depreciation. Suppose rate of depreciation is 10%. We apply this 10% on original cost. But all we have the information is 81 rupees. That is, we have information of WDV. We don't have the information of this. In our current case, in our current question, right? We have information about 4,86,000. We don't know what is the cost. So we discussed how to go from here to here. Correct? How we have to go? In simple terms. First, I explained you mathematically, that is using algebra. Next, we discussed using our trick. Now, I'll just quickly revise again. Suppose first year, let's say our cost of the asset is X. Correct? So X is our cost of the asset. Now, how do you calculate depreciation? So right now, what is the rate of depreciation here? Earlier in WDV cases, the rate of depreciation was 10%. Correct? Yes? Okay. Now, depreciation rate was 10%. Now, what happens in first year? X is my cost of the asset minus depreciation 10% on X. Correct or no? 10% on X means 10% into X. That will give us closing WDV. Correct? This is price. This is rate of depreciation. This will give us WDV. Correct? Now, if you break this down, how it will look like? X minus 0.1X. This equation, if you break down, X will come as it is. 10% of X can also be written as 0.1X. How is that, sir? Basic maths. 10% is nothing but 10 by 100. It will go 1 divided by 10 can also be written as 0.1. Correct? Yes. So 0.1X. Now, X minus 0.1X is equal to 0.9X. So this is our closing WDV. This will be our closing WDV. Now, this is for first year. Now, what will happen for second year? We will take this closing WDV and again on this we will do depreciation. Correct or no? 10%. Sorry. 10% 0.9x. Right? Now, if you break down this equation again, 0.9x into 0.1 into 0.09x is the equation. Yes. So ultimately, if you break down, it will come to 0.81x. 0.81x. Sir, 0.1 into 0.09 will come to 0.09x. Okay. So 0.9x minus 0.09x will give you 0.081x. Correct? Now understand. 0.081x represents 4,86,000. Am I right or not? See here, we started X, we reduced 10% depreciation, we got the WDV. On that WDV, again 10% depreciation is done, so we got 0.81x. In other words, if our asset price was X, we reduced 10% in the first year, again we reduced 10% in the second year. After that, what value we are having is 0.81x. 0.81x. So in other words, in our example, in our question also, there was a number x, we reduced the depreciation, again we got some other number, there we reduced the depreciation, again we got that number is nothing but 4,86,000. In other words, 0.81x is similar to 4,86,000, correct? Yes. Now how do you calculate x is equal to 4,86,000 divided by 0.81? Please calculate and type in your answers. That will give you 6 lakh rupees. So 6 lakh was the original price of the asset. Sir, how is it correct, sir? Should we check it out? Okay. So 6 lakh was our original price, correct? So first year depreciation 10%. So what is the depreciation? 60,000. What is the WDV? 5 lakh 40,000. This is year 1, that is 22, 23. Next, second year 23, 24. What will happen? 5,40,000 into 10% is equal to 54,000. So what is the WDV? 5,40,000 minus 54,000 will give you 4,86,000. Don't we have the same answer in the question? Your understanding? Yes. So using algebraic equation, instead of, see, if they would have given us this figure, we would have calculated like this and arrived at the WDV, correct? Right. Now what has happened? They have given us this figure. Now we need to calculate this one, correct? So what we will do? We will go ulta, correct? That is what we did. So we just used 110 as our common equation and found out our remaining WDV should be 81%. See, 0.81 is nothing but 81%. So our remaining WDV should be 81% of the original cost. Sir, how 81, sir? Sir, how 81 is simple, sir. First year 100 minus 9. Sorry, 100 minus 10 is equal to 90. Next year 90 minus 9 is equal to 81. Sir, how did you get this 10 and 9? Sir, this is nothing but 10% on 100. Here 10% on 90. So, in other words, 4,86,000 represents 81%. So, how do you calculate 100%? Simple, sir. Divide it by 81%, 4,86,000. Correct? So, if you divide it by 4,86,000 divided by 80% is nothing but 4,86,000 into 100 divided by 81. Yes, hope everybody is understanding. This 81 is equal to 4,86,000. Sir, cross multiplication, please understand. 81% is 80. Let's forget about 81%. Let's just look it as a number. 81 is represented by 4,86,000. How much is 100? Question mark. Cross multiply. So 4,86,000 into 100 divided by 81 will give you 6 lakh. In other words, 4,86,000 divided by 81% is also going to give you 6 lakhs. I hope this is clear. Yes, a quick recap. Using algebra, how we can arrive at this figure. But I know you are a students. You are having allergy with mathematics, correct? You want tricks. Now, what is the trick, sir? The trick is lying in this formula. This formula also we discussed, but again revising that. What is the formula for WDV? Understand this. 1 minus I raised to n x. Sir, what is n? N is number of years. I is rate of depreciation. And x is your WDV. X is your WDV. Clear? Now my question, what is this formula, sir? How does it help us? Simple logic, I'll tell you. Suppose if our WDV is, if our price is 100 rupees, if our price is 100 rupees, this is either WDV, this is either price or WDV. Okay. Let's assume our price is 100 rupees and our 1 will remain as 1 and our rate of depreciation is 10%. And suppose I want to know what will be my WDV after 3 years? I want to know what will be my WDV after 3 years. If you are students, what you will do? Sir, what I will do is 100, sir, 10%, sir. So depreciation will be 10, sir. WDV will be 90, sir. Next year, sir, 90, sir, into 10%, sir. Depreciation is 9, sir. WDV 81, sir. Sir, next year, sir, 81, sir. Depreciation will be 8.1, sir. Correct? Next, what will be the WDV? Tell me 81 minus 8.1. Anybody in the live? Students, please. That will be 72.9. Correct? So instead of calculating this big, this is how you used to calculate. Correct? Now let's see how it can be calculated using a shortcut. So you want to know what will be WDV after 3 years. After 3 years. Correct? So raise to 3. Now please use your calculator 100. Always remember, sir, 1 minus 10% is nothing but 0.9. You can use the calculator also. You can take 1 minus 10% also can be done. Is this clear? Raise to 3. Raise to 3. Now, can you please calculate 0.9 raised to 3 in your calculator? Please do 0.9 into 0.9 into 0.9. You got the answer, Appa? 100, 0.729 is nothing but 72.9. With just this formula, we are getting the same figure. Am I right? Instead of going in detail every step by step, I can just use this shortcut and find out the WDV. Am I right? Yes, everybody is following me. Yes? Okay. Now, same formula we will use in our current question. Now here, listen. So, what is our, after second year, what is our WDV? 4,86,000. 4,86,000. Correct? Now, what is the formula we have to use? X bracket 1 minus I raised to n. That answer should be 4,86,000. Correct or no? Yes. X 1 minus 10% raised to how many years? 2 years. Only 2 years. Stick to only 2 years. Why only 2 years? Because this 4,86,000 is the WDV which we have got after 2 years. That is after charging depreciation for 2 years. Right? So we'll keep it at 2 years. So that will be 4,86,000. So X is equal to 4,86,000 divided by 1 minus 10% can be written as 0.9 raised to 2. That will give you 6 lakh. So in your calculator, how you can do? Always remember this formula. Just take 4,86,000, directly come to this step. That's it, Appa. Directly come to this step. See, this 0.9 will remain as it is. If your depreciation rate was 0.5, 15%, then it will become 0.85. If your depreciation rate is 20%, then the denominator will become 0.8. It will not change. What will change? Only the upper ka. Only this will change. Only the upper number will change. The raise to, the n part will change. Am I clear? Yes. So if it is 3 years, we could have just used 3. If it is 4 years, use 4. Clear? So this is the formula for your answer. Now, coming back to the question. So we got 6 lakhs. In this 6 lakhs, there is something 60,000 worth of asset which is already sold. For that, we have already calculated profit gain. Everything is done. Correct? Now, what is the remaining value of the asset? 5,40,000. So we got our original price of asset which is still used in the business. Now, how do you calculate depreciation? Simple. Take 5,40,000 into, what is the rate of depreciation they have asked us to? The firm provide depreciation on its machinery 10% on original cost 31st March every year. Show machinery account and depreciation account. So again, they are asking us to charge 10%, but this time on the original cost. So our original cost is 5,40,000. So 10% on this will be 54,000. That will be our depreciation. Clear? On the asset which is still being used. Am I clear, guys? Everybody is following? Okay, coming back to the question. Now, which question we are in? Sorry. Yeah, this question. Yes, we have found out everything. Now we found out about our depreciation as well. We can write off the depreciation. See here the calculation they have done. Yes. Similarly, this is the depreciation on machinery sold. This is the depreciation on the existing asset. Correct? Now, they have even purchased the machinery. Correct? New machinery costing 70,000 was purchased on the same date. On which date? On 1st October 2021. Now we have to calculate depreciation on this 70,000 also. Yes. Okay. 70,000 on when it was purchased 1st October. So how many months it should be depreciation? October, November, December, Jan, Feb, March. 6 months. What is the depreciation? 10%. That will be 7,000. 6 by 12. So that will 3,000. 70,000 only, no? Oh, sorry, there is installation cost of 5,000 as well. Sorry, I missed. 70,000 plus 5,000. So that will be 7,500. 6 by 12 will be 3,750. Okay. So we have prepared account till here. Now we'll prepare on 31st March by depreciation. By depreciation, how much is it? Okay. First we will record the purchase entry. Correct or no? We have purchased an asset, right? So by purchase of new, oh, we have already recorded. Sorry, my mistake again. We have already recorded here 70,000 plus 5,000. We have already recorded here. So we can directly record by depreciation. One is our 54,000, that is on the existing machinery. One more is our by depreciation on our new machinery, that will be 3,750. Am I clear? Any doubts in this? So in our last class we had discussed till this, but now we again revised it, and this one also we understood. Am I clear? Any doubt in this part? If you want to calculate, you can calculate the total. If you can help me in calculating the total, it will be great. Anybody? 4,86,000 plus 70,000 plus 5,000. 4,86,000 plus 75,000. That will be 5,61,000. Correct? Yes. Now on the credit side, shall we calculate? Yes. 2,430 plus 2,430 plus 1 second. 2,430 plus 40,000. That is the value at which we have sold the asset, plus 6,170. That is our loss on the asset. 6,170 plus 54,000 plus 3,750. 3,750. So that will give us 1,06,350. So 5,61,000 minus will give us 4,54,650. This will be what? By balance carry forwarded. This will close our books. This will close our machinery account. Am I clear? Anybody is having doubt? Anybody is having doubt? You want me to repeat anything? Please, online students can reply. I hope it is clear. I hope the concept is understood. No doubts with respect to the concept. If you have any doubts, you can ping me. I can help you. I hope this concept is clear. If you want, I can explain it again if you are having doubt. I hope I have explained it clearly. Just again, I am giving you a glimpse. If your cost of the asset is 100 and 10% is the depreciation, then WDB will be 90. If your WDB is 90, again 10% depreciation, it will give you 81. Correct? This will continue. Right? So, the same thing has happened with us. X was our cost of the asset. 10% we deducted. So, it will be 0.9x. Next again 0.9x minus 10. It is 0.81x. Now, we don't know what is x, but we know this one. 0.81x we have the value, that is 4,86,000. But we don't know what is x. See boss, we had 6 lakh. On that, after multiplying 0.8 only, we got 4,86,000. Correct or no? So, this 4,86,000 represents this 0.81x. If you want to find out what is x, then you do the same thing. 0.81x is represented by what? 4,86,000. So, x is equal to 4,86,000 divided by 0.81. That will give us x as 6 lakh. This is one method. What is another method? If 6 lakh is asset, then what is the WDV after second year? How do you calculate? Take your calculator, 6 lakh into 90% into 90%. That is nothing but 0.9 raised to 2. Adar badli, in your calculator for simpler and easy way, 6 lakh into 90% into 90%. That will give you 4,86,000. Now we didn't know this. Now we are having answer. So that is why we did 6 lakh into 90% into 90%. We are getting 4,86,000. Correct? Yes. But we don't have this. What to do? We don't know this, right? But we have this. So you take these two items on the right hand side. It will automatically become 4,86,000 divided by 90% into 90%. That is nothing but 4,86,000 divided by 90% whole square. Correct? Automatically we will get 6 lakh as the answer. Sir, how did you come at this 90%, sir? What is the logic behind that? Already explained. The logic is 1 minus I raised to n. 1 is your 1. I is 10%. Raised to n is 1. Suppose, let's say. So that will give me 90%. If n is 2, 2. N is 3, it will be 3. Am I clear? Yes. If n is 5, then 90% raised to 5. In simpler terms, if 10 lakhs is your cost of the asset and you want to know what is the WDV after say 6 years. You don't have to sit and calculate year 1, year 2, year 3, year 4, year 5, year 6. Nahi karna hai. We don't have to do all those things. So what you have to do, sir? Simply take your calculator, type 10 lakhs. Type 10 lakhs. Okay. Now, once you type 10 lakhs, multiply it by 90% for 6 times. Sir, what is 6 times, sir? 6 times is nothing but 6 years. Correct? So, 10 lakh into 90% will give you first year WDV, into 90% will give you second year WDV, into 90% will give you third year WDV into 90% will give you fourth year WDV into 90% will give you fifth year WDV into 90% will give you sixth year WDV. That's it. Clear? Likewise, you can even use this formula for depreciation also. Sir, what is that? What do you mean by this? Say, for example, 100 is your depreciation. Correct? Yes. First year is 10. So, what is WDV? 90. Next year will be 9. So, what is WDV? 81. Now, if you have 100 and if you use my formula, the calculations, the trick, which you can use in the calculator, 100 into 0.9 into 0.9 will give you 81. Correct, Appa? 100 into 0.9 into 0.9 will give you 81. In the similar way, now be careful. First year depreciation is 10, na? You multiply 90% to this. You multiply 90% to this. You will get 9. Now you multiply, for 9 you multiply 90%. You will get, that is our third year depreciation. Look at it. You are understanding? So in case of reducing balance method, you can use this trick. Yeah. Remember this. 1 minus I raised to n. Whatever might be rate of depreciation. If it is 20%, write down 20%. If it is 40%, write down 40%. This will help you in finding out the WDB directly after some years. How much is the WDB? You can get it directly. Am I clear? Okay. Okay. Now coming to the next question. Question number 5. Sorry. Okay, we skipped one question. Huh? No. Okay, sorry. Let's come back. Question, illustration number 4. Illustration number 4. On 1st April 2022, a firm purchased machinery for for 2 lakhs. How much? 2 lakhs. On 1st October in the same accounting year, additional machinery costing 1 lakh was purchased. On 1st October 2023, the machinery purchased on 1st April 2022, having become obsolete, was sold for 90,000 rupees. So we purchased the machinery on 1st April 2022 for 2 lakh. That machinery is sold on 1st October 2023 for 90,000. Sir, why it is sold for such a low price? Because they are telling it has become obsolete. Obsolete means out of technology. That means that machinery is outdated. We cannot use the same machinery to get our material or our product. Okay, and much better machinery has come out in the market which can produce in a faster manner or in a better manner. So that is why we want to sell this machinery and buy a new machinery. Okay. Okay, coming to the question. On 1st October 2024, new machinery was purchased for 2.5 lakh, while the machinery purchased on 1st October 2022 was sold for 85,000. So again, this 1 lakh purchased in the first year itself is also sold for the value of 85,000 on the same day. The firm provides depreciation on its machinery at 10% per annum on original cost every year. Show machinery account and depreciation account. A good question, provided you understand the concept very clearly. Let me first explain you the question itself, then you will understand the concept. Okay, let's start with the question. Let's first start with the timelines. Correct? On 1st April 2022, a firm purchased a machinery for 2 lakh rupees. Okay, let's write down. When? On 1st April 2022. It purchased for how much? 2 lakhs. Okay. Now, on 1st October in the same accounting year, additional machinery costing 1 lakh was purchased. When? On 1st October. For 1 lakh. This is our year 1. Now, on 1st October 2023, okay, now coming back. On 1st October 2023, the machinery purchased on 1st April 2022 having become obsolete. That means the machinery which was purchased here had become obsolete and was sold for 90,000 rupees. That means this machinery is sold on 1st October 2023 for how much? For 90,000 rupees. Clear? Okay. Coming. On 1st October 2024, a new machinery was purchased for 2.5 lakh. On 1st October 2024, a new machinery was purchased for 2.5 lakhs. While the machinery purchased on 1st October 2022 was sold for 85,000 on the same day. That means on 1st October 2024, we sold a machinery for 85,000. Which machinery we have sold? We had sold this machinery. Understood the order? First we purchased machinery for 1,20,000. Okay. We purchased the machinery for 2 lakh. When? On 1st April 2022. Now that machinery was sold on 1st October 2023 for 90,000 rupees. What was the reason? It became obsolete. Now again, what happened? We purchased a new machinery on 1st October 2024. But look at it carefully. On 1st October 2022, the machinery which was purchased for 1 lakh was sold on 1st October 2024 for 85,000. That means the machinery which we started our business with, that is the one which was purchased in the first stage. That is, first we purchased 2 lakh, then we purchased 1 lakh. Now both the machines are not there in the business. Both the machines are not there in the business. Both the machines are sold. Both the machines are sold. But understand, timing is the issue. Timing is the issue. Now come back here. Now, 1st April 2022, you purchased this. 1st October 2022, you purchased this. So this belongs to which financial year? Financial year 22-23. Financial year 22-23. That means my question to you, have we purchased it in the financial year 22-23? Answer is yes. Have we sold it in the financial year 22-23? Answer is no. We have sold it when? In the next financial year. 1st October 2023 belongs to next financial year, not current financial year. What is the current year financial year? Starting from April 2022 to March 23. Have we sold it during that period? No. So that means what? This machinery, both the machinery was used for financial year 22-23. Correct? It was used for financial year 22-23. So will depreciation come? Answer is yes. Depreciation will come for financial year 22-23. That is clear. So shall we first calculate depreciation on this part? Yes. Let's calculate it, depreciation on this part. Depreciation for 22-23. Now, when was this machinery purchased? 2 lakh. That means it was purchased on 1st April 2022 for 2 lakh rupees. This machinery was purchased on 1st April 2022 for 2 lakh rupees. Does that mean that this machinery has been used for the entire year? That is from 1st April till 31st March. Correct? So it has been used for complete 12 months. Correct? So depreciation should be charged for complete 12 months. Am I right? Yes or no? Yes, because it was purchased on 1st April. That means April, May, June, July, August, September, October, November, December, January, February, March. So 12 months we have used the machinery. So depreciation has been charged for 12 months. So how do you calculate depreciation? 2 lakh rupees into what is the rate of depreciation? 10%. It is following SLM method, correct or no? Because they have hinted you like this, 10% per annum on original cost. So this means what? SLM. SLM. Okay? Okay. Now 20,000 is the depreciation. Clear? Now coming to this. 1 lakh is the cost of the machinery. Depreciation rate is 10%. But here we have not used the machinery throughout the year. Sir, why we have not used the machinery throughout the year? Because we had purchased the machinery itself on 1st October. If machinery is not available from April, can we charge depreciation? No. Matching concept. Correct or no? What is the matching concept? For every income, there is expenses. If machinery is not there with us, how will we earn the income? Correct or no? So when did the machinery come? Machinery come on 1st October. So depreciation should also be charged from 1st October. Clear? So October, November, December, Jan, Feb, March, 6 months. Correct or no? So 6 months divided by 12 months. Sir, what is this 6 months divided by 12 months? See, this 10% is for 12 months. How much for 6 months? 10% is for 12 months. How much for 6 months? Cross multiplication. 6 months into 10% divided by 12 months. Basic mathematics. Okay. Now that will be how much? 10,000, 5,000. 5,000 rupees. The depreciation. Okay. Now coming to next financial year. Financial year 23-24. Now understand. Machinery 1 was sold here. For how much? For 90,000. But when it was sold on 1st October 2023. That means didn't we use that machinery from April to October? Correct or no? We use the machinery from April to October. So April to October depreciation has to be charged. So that will be how much? April, May, June, July, August, September. 6 months we have used. Sir, you said October. Correct. When did the machinery get sold? October 1st. So that means depreciation also should stop on 30th September. Because when we sell the machinery on 1st October, we can't depreciate on that day because that machine is already sold on 1st October. So when we have to stop? We have to stop on 30th September. Clear? So April, May, June, July, August, September. So that will be 6 months. So should we charge depreciation on this for 6 months? Answer is yes. So what is the cost of the machinery? 2 lakhs into 10% into 6 by 12. Now don't tell me why we are taking 2 lakhs, sir. Why we are not taking? What is the WDV here? 2 lakh minus 20,000 is 1,80,000. Correct? Why are we not taking WDV, sir? Because we take WDV in case of reducing balance method or diminishing balance method. Here we are using which method? Straight line method. In case of straight line method, we will directly apply the rate of depreciation on original cost. Correct or no? So our original cost is 2 lakh rupees. So on that 10% we will apply. But we will apply for how much? Only for 6 months. Why? Because machinery was used in the business for only 6 months. So that will be 10,000. So depreciation will be 10,000. Now coming to this machinery. Was this machinery sold in the current year, that is in the year 23-24? Answer is no, it was not sold. So that means we have used this machinery throughout the year. Correct or no? When this machinery is not sold, it means we have used throughout the year. Right? Am I right? So depreciation should also be charged throughout the year. Correct? Okay. So let's calculate depreciation for entire year. That will be 10,000. So our depreciation will be 20,000. Now let's find out this machinery was sold for how much? 90,000. Whenever we sell a machinery, we will always calculate profit or loss on sale of that machinery. Correct? Profit or loss on sale of that particular machinery. Correct? So let's calculate how much profit or loss we have made. Right? Okay. So we bought the machinery at what value upon 2 lakh. When did we bring? On 1st April. Correct? 2022. Depreciation for 22-23. How much was it? 20,000. What is the WDV? 1.8 lakh. Now, again, there is a depreciation for 23-24 also. Half year we have used it, correct? So, half year depreciation is calculated. That is how much? 10,000. So, what is remaining? 1.7 lakh. So, this is our WDV, written down value of the asset, correct? WDV is nothing but written down value of the asset. Written down means what? We have kept on writing down the value of that asset, correct or no? How did we write down the value of the asset? By charging the depreciation. So this is WDV of the machinery. So what is the WDV is nothing but, you can even call it as book value. Book value. So WDV is nothing but book value of the machinery. Now book value is 1.7 lakh, but you are selling it at, you are selling the machinery at 90,000 only. 90,000 only. That means what is the worth of the machinery in your books? 1.7 lakh. But for how much you are selling? 90,000 only. That means are you not making loss? Yes or no? Selling price minus WDV will give you 90,000 minus 1.7 lakhs will give you how much? Negative. That is why it is called as loss. We are making a loss of 80,000 rupees. We are making the loss of 80,000 rupees. Clear? Yes? Okay. Now coming back. So we have identified the loss also. This loss is for which year? This loss will be happening in 23-24. Why 23-24? Because we sold it in 23-24. Okay. Yes. Is that clear? Okay. Now come to the next year. Now, in the next year, we purchased an asset for our business, which is new asset, right? We purchased for how much? 2.5 lakh. When did we purchase? We purchased on October 2024, 1st October 2024. Now, again here, we can charge the depreciation from the time the machinery is put to use. Put to use means what? When we are going to use it in the business. When we can use it in the business, sir? Shall we use it from April 2024? Is it possible? Answer is no. When you don't have the machinery itself, how will you use it? Right? Without machinery, can you use it? Answer is no, you cannot use it. So when was the machinery made available for use? 1st October 2024. So depreciation should also be charged on from 1st October 2024. So depreciation on this 2.5 lakh into 10% into again 6 by 12. Why 6 by 12, sir? October, November, December, Jan, Feb, March. Right? Yes. So that will be 25,000 into 6 by 12 is nothing but 12,500. 12,500. Okay. Now coming back to this asset. Sir, this asset was purchased on 1st October 2022 but got sold on 1st October 2024. That means, have we used that asset for the entire year? Answer is no. We have used that asset for how many months? Only 6 months. So depreciation will also be charged for only 6 months. Correct? Yes. So what is the value? 1 lakh into 10% into 6 by 12. That will be 5,000. Am I right? Yes. Now again coming back. This asset is sold. So whenever there is a sale, there will be profit or loss. Am I right? Yes or no? Okay. So what is the purchase price of this machinery? It was 1 lakh. What was the depreciation for 22-23? It was 5,000. Correct or no? Here. Right? Now what is the WDV? 95,000. Now what is again depreciation for 23-24? 23-24 it was 10,000. This one. Correct? Now what is remaining? Sorry, not this one, sorry, this one, this 10,000. Okay, so what is remaining? 85,000. Now again depreciation for 24, 25. Correct or no? 24, 25. So how much is the depreciation? Again 5,000. So what is the WDV? 80,000. Now WDV is 80,000. Selling price is 85,000. This means what? Can we find out profit or loss? Yes. How to find out profit or loss? Selling price minus WDV. Selling price is 85,000. WDV is 80,000. So what is the profit? 5,000. If the answer comes in positive, it will be profit. If answer comes in negative, it will be loss here. In this case, selling price minus WDV, 90,000 minus 1.7 lakh. Answer came in negative. That means it is loss. Here the answer came in positive. It is profit. In simple words, our book value was 80,000. You are selling it at 85,000. Profit only, no? We are selling it at 85,000, but our book value is 80,000. Clear? So you made a profit of 5,000. Yes? So now we have made all the working notes. We calculated depreciation. We calculated loss or profit. Everything is calculated. Now what they have asked us? They have asked us to prepare machinery account and depreciation account. Shall we prepare it? Yes? Okay. Hi, hi. So let's prepare it. First, let's prepare machinery account. Machinery account. Dates are important. Dates are important. Please follow dates very strictly. Now here only we will draw our depreciation account. Clear? Yes? Okay. Now, 1st April 2022, we purchased the asset. We purchased the asset for how much? For 2 lakhs. What is the entry? Machinery account debit to bank account. Correct? Huh? So on 1st April to bank. How much? 2 lakhs. Am I right? Everybody following? Yes. Next. On 1st October 2022, again we purchased a machinery for 1 lakh rupees. So what is the entry? On 1st October, again the entry will be machinery account debit to bank account. Machinery when we purchase, the value goes up. Fixed assets goes up. Correct? So whenever asset value goes up, it will be debited. And bank is also asset, but bank balance will come down or go down? Go up, it will come down. So whenever bank balance comes down, it will be credited. So machinery account debit to bank account. Again, to bank. How much? 1 lakh. 1 lakh. Is there any other transaction in this year? Nothing. No other transaction. But we have depreciation. Yes, sir. There is depreciation. What is the entry for depreciation? Depreciation account debit to machinery account. Sir, why depreciation account debit? Why machinery account credit? Simple, sir. Depreciation is an expense. When expense goes up, it will be debited. Correct? Machinery is an asset. Correct? Machinery is an asset. As and when we use the machinery, the value of that machinery decreases. Correct or no? Because of wear and tear and effectiveness. Correct? That is why we are charging depreciation. And that depreciation is coming out of what? Coming out of machinery only. So depreciation is an expenses. As and when it goes up, it will be debited. Machinery is an asset. The value of asset is also decreasing. So it will be credited. So the entry will be depreciation account debit to machinery account. So here it will be on 31st March 2023 by depreciation. How much? We have calculated, no? Here, 25,000. Okay, the same entry here. 2 on 31st March 23. How much? 25,000. Okay, now let's close the books. What is the total here? 3 lakh. What is the total here? 2.5 lakhs. Correct? So the balancing figure will be by balance carried down 2.75 lakhs. Okay, so it will get carry forwarded in the next day 04/2023. So 2 balance bought down, that will be 2.75 lakhs. Clear? Here it will be close 25,000. 25,000. I've already told you expense will not get carry forwarded. Income will also not get carry forwarded. What it will be happening? It will be directly transferred to the P&L. So by P&L account 25,000. This accounts get closed. It will not get carry forwarded. Any income or expense account will never get carry forwarded. It gets closed. Okay. Yes. Next. Here. What has happened in the next year? A sale has happened and depreciation is also there. First, we'll record the depreciation on the asset which is actually sold. Correct or no? Yes? Okay. So on 1st October, some asset was sold. On that, we'll record the depreciation. By depreciation, how much on that? 10,000. Correct? The asset which is sold. Right? Yes? Okay. Then, did we sell the asset also? What is the entry when we buy the asset? The entry is machinery account debit to bank account. This is the entry which we pass when we buy the asset. Now when you sell the asset, what will happen? Exactly ulta. Bank account debit to machinery account. In our case, how much did we receive money in bank? 90,000. How much was the book value of the machinery? 1. How much? Have we calculated it somewhere? 1.7 lakhs. 1.7 lakh. So in our double entry system, debit and credit both should match. Correct or no? Debit, credit both should match. Is it matching? No. What is the difference? Difference is 80,000. It's nothing but loss on sale of machinery. Sir, why loss is debited, sir? Loss is an expenses. When expense goes up, it will be debited. So when we are losing something, when our value of the asset is 1.7 lakh and we are only able to sell it at 90,000, that means are we not losing something? Is it not our expenses? Correct or no? So 80,000 is the expenses which will be debited. It is a loss basically. Clear? Yes. Just like expenses, how it pulls down the profit, loss will also pulls down our profit. Clear? So income, credit, expenses, debit, and losses also debit, gains will be again credit. In other words, sir, income and gain is nothing but same nature. In the same way, expense and losses are having the same nature. Both will be debited as and when it increases. If it is decreasing, it will be credited. Here, exactly ulta. Increasing credit, decreasing debit. So in our case, loss is increasing, so we are going to debit it. Clear? So what is the entry we can pass here? By loss on sale of asset. How much is the loss? 80,000. Then here, to bank. Sorry, not to bank. My mistake. Sorry. Both are debit, no? By bank. 90,000. By bank, 90,000. See, this entry I have recorded here. Bank account debit, loss on sale of asset debit to machinery account, correct? Machinery account is getting credited, so we will start on the credit side. So on the credit side, it will be by bank and by loss on sale of asset. Am I clear? By bank and by loss on sale of asset. Everybody, is it clear? Any doubts in this? Okay. Now in the depreciation account also, we'll record the depreciation on the asset which has been sold. So 01/10/23 to machinery account How much is the depreciation? 10,000. Don't transfer it immediately. Why? Because we are on October. When the transfer will happen? On 31st March. So wait. We have one more depreciation to be charged, correct or no? See, this asset is sold, but this asset is continuing, no? This asset is still continuing. So on that we have calculated depreciation. So should we charge depreciation on that? Answer is yes. So on 31st March 2024, on 31st March 2024, by depreciation 10,000. By depreciation 10,000. Here also to machinery 10,000. 20,000. 20,000. So what will happen here? Both will be sent to by P&L 20,000. Am I clear? Okay. Next. So this should get closed now. Correct or no? We have to close the account. Hmm? Hmm. Please close the account. 10,000 plus 80,000. 90 plus 90. 1 lakh 80. 1 lakh 80 plus 90. 1.9 lakh. Here it is 2.75 lakh. So 2.75 lakh minus 1.9 lakhs. Please calculate it. 1.9 lakhs minus 2.75 lakhs. Can you please calculate it? Is nothing but 31st March 2024 by balance carried down will be 85,000. 85,000. So that will close your account. That will close your account. Okay. Now again, this will be brought down to the next year. 01st April 2024 to balance carried down 85,000. Yes, Hemant, thanks. 85,000 is the answer, correct? Okay, now let's take the next year. We have already prepared workings, sir. Next year, what has happened, Appa? Sir, next year, two transactions, sir. One we have purchased, sir, on October 2024. Let's record that transaction. We have made the purchases, sir. Yes, sir. To bank account. How much? 2,50,000. Sir, why two bank accounts, sir? Simple, sir. Whenever we purchase machinery, the entry will be machinery account debit to bank account. So machinery account debit to bank account. Machinery is debited, so we'll start on the debit side and we'll record to bank account. Clear? Huh? Okay. Now, next. Sir, we have sold one asset, sir. We have sold a asset, sir. Which asset, sir? This asset, sir. Howda, sir? We have sold asset. Okay. First, let's record the depreciation on the asset which has been sold. How much is the depreciation? 5,000. Okay, 5,000. When did we sell it? On October 2024, sir. By depreciation on the asset sold. How much is it? 5,000. Next, let's record the sale entry. Correct or no, sir? Let's record the sale entry. Yes or no? What is the sale entry, appa? How do we record the sale entry? Can anybody tell me what is the entry? When we purchase machinery account debit to bank account. When we sell it, ulta. Bank account debit to machinery. Just now we discussed, no? Bank account debit to machinery. Correct? Everybody? Yes? Okay. Now, we have calculated profit or loss. Correct? Now, what was the WDB of the machinery? WDB has been calculated here. Correct or no? WDB was how much? 80,000. Correct? So, machinery value is only 80,000. How much we have received the money in the bank? 85,000. Debit to credit are not matching. Why it is not matching? Simple, sir. We have made profit. So, whenever profit is made, it will be credited to profit on sale of machinery. How much is it? 5,000. Now matching a debit to credit, here also 85,000. Debit side, credit side also 85,000. Correct or no? Debits and credits are matching. Am I right? Debits and credits both are matching. Clear? Now we have to record this entry. Bank account is debited. Yes. So we'll write down by bank. By bank. How much? 85,000. Okay. Recorded. Now to profit on sale of machinery is credited. So we'll record it. To profit on sale of machinery. How much is it? Yes. Okay, done. Next. On 31st March, there is one more depreciation. Correct or no? By depreciation. What is that one more depreciation, sir? This asset, the asset which was purchased in that year. 12,500. 12,500. Correct? Should we record it here also? Yes, sir. On 1st October 24, to machinery sold. How much? 5,000 only, no? Then on 31st March 25 to machinery 12,500. Total 17,500. Here also 17,500. By profit and loss 17,500. Date will be 31st March 25. And here also we need to close the books. Correct? Close it up. 85,000 plus 2.5 lakhs. Please calculate for me. 85,000 plus 2,50,000 plus 5,000 minus 5,000. This total will be 3.4 lakhs. Now here also we need 3.4 lakhs. What is the difference? We'll find out. So 3.4 lakh minus 5,000 minus 85,000 minus 12,500. That is nothing but 2,37,500 by balance carry forwarded. If you observe correctly this figure 2,37,500, it is nothing but the asset which was purchased in the current year is how much? 2.5 lakh minus depreciation on that is how much? 12,500. What is remaining? 2,37,500. This is WDV of the asset. This WDV only should come here, no? As a balancing figure. That is it. Sir, what about remaining assets? Remaining assets are already sold, no? That will not come in WDV. The asset which is existing in the business will come to WDV. So what is existing? Only this asset. So what is the WDV of that asset? 2,37,500. So that is coming as our balancing figure. That is coming as our balancing figure. Anybody is having doubts? I hope it is clear. If you are having doubt, you can quickly ask me. I'll revise or I will revisit the topic. If it is clear, please give me a thumbs up or please say everything is clear, sir. We can move forward. So is the things clear? If the things are clear, just say yes. If it is not, please say no. Then we can check what is not clear and we can take it forward. Yeah, I hope things are cleared. Now let's go to the illustration number 5. Last illustration of this chapter, illustration number 5. ABC and Co. a registered patent on 1st April 2024. They are telling you intangible asset. Now they are giving you hint that it is an intangible asset. So in depreciation chapter, what was the name of this chapter? Depreciation and amortization. Depreciation will come to where? For all your tangible asset, depreciation will come. Right? For intangible asset, what will come? Amortization. So they are telling you it is intangible asset. That means what? Now you should not use the word depreciation. You should use the word amortization. On 1st April 2024, developed at a cost of 12 lakh. So they are telling you a patent was registered and the cost of that patent was 12 lakh. Not cost of registration, cost of developing that patent. Sir, what do you mean by cost of developing that patent? What do you mean by cost of developing that patent? It is nothing but the R&D work which you have used. Sir, patent means some formula you might have arrived at, some know-how you have arrived at, some new invention you have done. So that invention or that formula or that know-how will be registered. Once it get registered, it will be called as patent. Clear? Okay. So that patent which you are registered, the R&D for that was 12 lakhs. So develop at a cost of 12 lakh and 1 lakh towards legal and registration fee. See, registration fee is only 1 lakh. So what is the total cost? For development, the total cost is 12 lakh plus for registration, it is 1 lakh. So what is the overall cost of the patent? 13 lakhs. Now don't tell the patent is only for 12 lakh or don't tell the patent is only for worth 1 lakh. No, sir. You have spent in developing that. First, that is also cost. Second, you have spent some money to register that. That is also cost. If these two things are not there, then that is not even asset for you. Sir, how it is not an asset, sir? If you have not spent any money on that development, then what you have developed? Correct? Nothing has been developed. Right? So it will never come. It will never come. Right? So if you invest some money, then only you are creating some asset. Right? So that asset here in this case it is called as intangible asset because you are creating some formula, and to create a formula you must have hired researchers, testers, you might have taken a lab on rent, you might have set up so many equipments for testing, correct or no? You might have incurred so many expenditure, right? So to develop any formula or to invent anything, you would have incurred the cost. So that cost is nothing but your value of the asset. Along with that, whatever cost is incurred to ensure that asset is created. Sir, without patent, what will happen, sir? Without patent, what will happen is everybody can use that formula. So, for example, you called your girlfriend saying, wow, I did this wonderful job. I finally invented this particular formula. I have calculated this is coming out to right of that, this, everything you told to your girlfriend. Now, what happened? Girlfriend was in the public space and she had put her phone on loudspeaker. Now, while you kept on explaining your formula, somebody from the crowd who was just beside your girlfriend heard about that formula. Or maybe her best friend or his best friend, whoever it is, they overheard the formula. Or your girlfriend only might have decided to use that formula on her own. Yeah? Your girlfriend or boyfriend, whatever it is. Just kidding, but take it as example. Now what happened? You did all the research. Next day morning, you try to go and say that I want to get this patent registered. Somebody has already registered the patent. Now what will happen? You're understanding? So if you don't patent your formula and without patenting, you try to use the formula, then somebody might steal it. Once they steal it, you can't do anything. Suppose your girlfriend stole that formula and patented it in her own name, gone. She will be entitled with that formula. Whether she has really done or not, that is different. You're understanding? Whether she has really done some work on that or no. Clear? But who has got the patent? Of course, you can go for legal case battle. That is altogether different. But the thing is simple. She can still go and register it in first instance. Clear? Okay. So, developing a formula is important, but patenting is as important as developing the formula. Clear? Developing a feelings towards your girlfriend is important, but telling her is also important. Right? Yes. So, total 13 lakh will be cost of our development and registration. So, your patent cost will be total 13 lakh. Don't take 12 lakh or don't take 1 lakh. This both are together. Sir, if there was no development at all, what you would have gone and patented? Just like in our great public civic census, where they will go to all these historical places, carve their name beautifully, just like as if they are doing some great sculptures on the historical venues. Like that, if you go and just give, this is my patent. But what is patent? You should tell. Correct or no? You can't go like these people who doesn't have civic sense, go to some historical places, do the design, one arrow mark, 2 names. Adu work agala, sir. You have to really have a formula. So these two costs are interlinked. If you have done this cost, then this will come. Sir, I tried to develop the formula, but the formula failed. Then there is no question of patent. Clear? The question of patent will come only when you develop the formula. Clear? Okay. So 13 lakh is total cost of the patent. Okay. The patent is granted for 10 years. The book are closed on 31st March every year. Show the patent accounts and amortization accounts. I have already told you very clearly. In depreciation, there are different methods. Annuity method, insurance method, replacement cost method, WDV method, straight line method, so many, sum of digits method, lot of methods. In amortization, nothing doing. Simple method. What is the simple method? Straight line method. What is the straight line method, sir? Straight line method, simple rule. What is the cost? 13 lakhs. How many years? 10 years. So each year, how much you will write off? 1.3 lakh. Ashte. Straight line also, this only we done, no? Straight line method, if you remember correctly, boss, what was the formula of straight line method? Original cost minus scrap value divided by useful life. Sir, original cost is 13 lakh. Sir, scrap value barala, sir. Patent is scrap iralla, sir. You cannot scrap your patent and put it in the Gujari shop. Gujari shop will say, if you go to the patent certificate and throw it on his face, he will not even give you 10 rupees for that certificate. Clear? So, patent is scrap value iralla. So, this is not there. So, what is remaining? Original cost divided by useful life. It is nothing but SLM. Correct or no? So, 13 lakhs divided by 10 years will give you 1.3 lakhs each year. 1.3 lakhs each year. So, if you open a machinery account, how it will be? First is to bank account, not machinery, patent account. To bank account. What is this? 12 lakh. This is nothing but the cost you have incurred to develop the formula. It is 12 lakh. Next will be what, sir? Your registration and legal charges. To bank account, registration and legal charges. Sir, here also the formula of journal entry remains the same, sir. Intangible asset. The name itself says it is a asset. Patent is an asset. So when asset goes up, it will be debited. So which asset is going up? Patent is going up. So patent account debit. Which is coming down? Bank account. Why? You are spending money from bank. Correct or no? So to bank. Patent is debited. So we'll start on the debit side. And we'll write down to bank account 12 lakhs. Clear? In the similar way, our legal and registration charges also will be added to the cost of asset. Again, the entry will be patent account 1 lakh, to bank account 1 lakh. So, to bank account 1 lakh. Now, what is the first year amortization? 1,30,000. We calculated here, correct or no? What is the entry? Again, same, sir. Amortization is an expenses. When expense goes up, it will be debited. So, amortization account debit to patent account. Sir, why to patent account? Because we are using the patent, no? When we use the patent value will also come. Now, don't tell wear and tear here. Hello, there is no wear and tear, Amma. There is no physical asset. It is intangible asset. It is intangible asset. Only you know that there is an asset. There is a formula. It cannot be touched. Physical characters illa. So don't tell the world wear and tear. There is no wear and tear, sir. Then why we are amortizing, sir? Why we are amortizing? Because matching concept, you remember? Every income will have a expenditure. So using this formula, you might have earned the income. Now to that, matching to that, there should be expenses. What is that expenses? The expenditure which is incurred to develop the patent. But the patent entire amount, how much you incurred? 13 lakhs. Will you use this 13 lakh of expenditure in one single year? No. You are going to earn money for next 10 years. Why next 10 years only, sir? Because 10 years is the maximum they have given the patent. Sir, what will happen from 11th year? The patent is no more. That means what? Everybody can use it. Everybody can use the formula. Clear? Always it is like that, sir. Patent will be registered for 10 years plus 10 years. Maximum 20 years. After that, everybody can use that. Your seat belt, car seat belt was also patented by Volvo. Of course, they didn't make it, commercial. They gave it free of cost to everybody. Car engines were also patented. So during the first 20 years, if some other company will come and try to make an engine using that design, then they had to give the cost to that. For example, Fiat had an engine design. Fiat had patented the engine design. So initially everybody used to pay money to the Fiat to make the engines. Now again it is free. After 20 years that patent will be no more available. Clear? So anyway patent works like this. Only 20 years it will be for that particular person who has developed it. After that it can be used by everybody without paying a penny. Clear? So you can use this patent for 10 years and earn the revenue. So whatever cost you have incurred, you are going to write it off for next 10 years. Why I am going to write it off for next 10 years? Because you can use and earn money for only 10 years. So that is why amortization is charged 1.3 lakh considering 10 years. So what is the entry? Amortization account debit to patent account. Amortization is an expenses. Patent is nothing but value is getting decreased. So it will be credited to patent. So balancing figure will be 11,70,000. Next year it will be taken. Again, what is the amortization? 1,30,000. 1,30,000. Don't again go, sir, 11,70,000 is remaining, sir, divided by 10 years, sir. Don't do that, sir. Don't do that. It will be wrong. I told you it is a straight line method. Once you calculate, this will remain forever and ever. Every year amortization will be 1,30,000 only. Every year the amortization will be 1,30,000 only. Am I clear? Yes. So here also 1,30,000, balancing figure 10,40,000. Next year it will continue. So every year it will continue. So this is amortization account to patent account 1,30,000 transferred to P&L. Here also it is an expense account. It will never get carry forwarded. It will be transferred. Clear? Everybody? Yes. Okay. So that is your amortization. Depreciation and replacement of asset. Understand one thing. Even though from the beginning we are understanding depreciation is used for 2-3 things. One, wear and tear it captures. Second, matching concept. Third, replacement provisioning. Correct? But understand one thing. Depreciation cannot completely create replacement reserve. Why, sir? Why? Because understand simple. Today you have purchased a laptop for 40,000. Okay? You are going to depreciate it in 4 years. So every year 10,000, 10,000 you are charging. 10,000, 10,000, 10,000. So by end of 4 year you are having total 40,000. Sir, I have created provision 40,000. I can purchase now. But by end of 4th year, this laptop which was 40,000 would have become 60,000. Reality, correct or no? What happened, sir? Why it became 60,000? Inflation, sir. Inflation, new technology, change in the raw materials, right? Prices will go up, correct? So, considering this, your depreciation, even even though it is helping you to create a provision for future replacement of the asset, but it is not completely covering you up for that. Why? Because there are multiple reasons. Inflation can be one reason. Obsolescence of a technology can be another reason. So even though, yes, depreciation to some extent will help you to create some provision for replacement, because depreciation and amortization is a charge against profit. Correct or no? It is a charge against profit. What do you mean by charge against profit? Have we discussed this? Yes. What do you mean by charge against profit? It gets directly reduced out of your profit. That is called as charge against profit. Correct? So even though your depreciation is going to create a replacement provision, but it is not fully correct. There are multiple reasons. One, estimating replacement cost in advance is difficult. The method of charging depreciation on the base of replacement cost is not recognized by income tax. You cannot say, sir, 40,000 is the cost of the asset, but in future the asset will become 60,000. So I will charge depreciation every year 15,000. So what is the cost? 40,000. How much you are trying to charge depreciation? 15,000. For how many years? 4 years. What is the total depreciation? 60,000. What is the total value of the asset? 40,000. Can you do it? No. So that is why income tax says, no, we are not allowing any replacement based depreciation. We are going to follow cost based depreciation. Inflationary is one more thing. And according to Companies Act, depreciation should be charged on original cost of the asset, not on any replacement cost of future. And any new asset purchased with few exception is always better quality than asset replaced. Clear? So all these are reasons why it will never work. Of course, it is helping you for creating the provision, but it is not totally creating a replacement value. Clear? Everybody is understanding? Amortization and depreciation key differences. Applicability. Amortization is applicable on intangible asset. Depreciation is applicable on tangible asset. General philosophy, depreciation means elimination in value over time. Amortization means write-off cost over a period of time. See, it is diminution in value over time. What? Tangible asset, the value diminishes over time. Value diminishes over time. But in case of intangible asset, there are two things. One, usage of this intangible asset to earn revenue. Because you are using it and earning revenue, you have to write it off the cost every year. Clear? Opting methods. Almost all intangible assets are amortized over the useful life of straight line method, but under tangible assets, there are multiple methods. Acceleration. Sir, in case of tangible assets, you can opt different methods of depreciation where initially you can charge maximum depreciation. Going forward, you can charge less depreciation. WDV is one of that concept, right? Reducing balance method or diminishing balance method is one of the concept where in the initial year the depreciation is very high. Going forward, the depreciation will be lower than initial years. Correct? But that is not there in amortization. Salvage value is there for tangible asset. Salvage value is not there for intangible asset. I already told you, you cannot go with a patent certificate holding on your chest and saying, take this Gujri man and give me some money. He will not give you anything. Yes, am I clear? Okay. Okay. So that is the end of this chapter. Now coming to one question to you guys. Okay. One question to you guys. We understood tangible asset, intangible asset, that asset, this asset, all those things we understood. Correct? Yes. So let us say tomorrow you start a business and you purchase a painting worth 1 crore rupees. What? 1 crore rupees. You are big company secretary now, full busy. You have multiple businesses. You are having offices all over India. Your revenue is too high. Now in your cabin you want to put one painting. Yes, a famous painter, Ravi Verma, for example. He has painted and you are purchasing that original painting for 1 crore rupees. Correct? Yes, sir. Yes, sir. I purchased it for 1 crore. Yes. Now what is big in this, sir? Now I am coming, sir. What is big, sir? Sir, this 1 crore painting, is it an intangible asset or is it a tangible asset? Is it an intangible asset or a tangible asset? Can anybody tell me? Sir, it is a tangible asset. How many? If you say it is a tangible asset, my question is, why tangible asset? Sir, because it has physical characteristics, sir. We can see, we can touch. Okay, done. It has physical characteristics. Now, my next question, will there be wear and tear? No, sir. Wear and tear is not there, sir. Wear and tear is there? No, sir. Wear and tear will not be there for painting, sir. The more older the painting is, the better price it will fetch in the market. Understand that one. The more older the painting is, the better price it will fetch in the market. Clear? So, painting will not have wear and tear. Of course, it will have some, what I can say is, some changes in that because of environment or atmospheric changes, because of the pollution, that, this and everything. Now, where you place that painting is very, very important. Now, you can't place that 1 crore painting on the compound of your building. Correct? You will put it inside the office only, where you get sunlight, everything properly. You will ensure that 1 crore is protected. Correct? Always remember, paintings will be appreciated, not depreciated. Clear? It will get depreciated only when you come to know that it has been stolen. Yes? Okay. Now tell me, sir, 1 crore painting, tangible assets, it will not have wear and tear. Of course, it has tangible features. You can see, you can touch. But is it tangible or intangible? It is artistic, correct or no? Artistic is a skill. If I am artistic, which I am not, of course, looking at my handwriting, you can tell that is different. I am not artistic, that is apart. But suppose if I am artistic, can you look at me and say, wow, this fellow is artistic? No, nobody can tell. You can say he is artistic only when you look at his drawings or something like that. So, artistic is a skill which is again intangible in nature. That painting, the one which Ravi Verma has done, if you do the same painting, same pin to pin, point to point, you have done. No change at all. Wonderful piece of art, exactly like Ravi Verma. Ravi Verma still will fetch 1 crore, he will still fetch 10 lakh rupees. Why? Ravi Verma is Ravi Verma, you are. Of course, I am not demeaning. Tomorrow, one day after with so much of experience, you might also reach to the stage of Ravi Verma. That is different. But I am just giving an example. Why Ravi Verma's painting is 1 crore? Why your painting is less than 1 crore? The answer is simple, sir. Because Ravi Verma has an artistic skill which is of no match by me. Correct? So, paintings are something which are tangible when you come to look at physical characteristics, but what is inside that is actually intangible asset. Because that painting is an artwork, it is intangible, it is a skill. Understanding? It is a skill, it is an intangible in nature. So what do we do, sir? Should we depreciate it? Should we amortize it? Is next question. Should we depreciate the painting or should we amortize the painting is the next question. Remember one thing, sir. Today's class you will remember and you will remember this point throughout your life. What is that point, sir? Intangible asset like painting. Example. Forget about tangible, intangible. But just remember, any painting which are in the nature of artistic, which has very high value, will never be depreciated, nor it will be amortized. Depreciation nu madalla, amortization nu madalla. Neither it will be depreciated, nor it will be amortized. Then what will happen, sir? It will be tested every year for something called as impairment loss. What loss? Impairment loss. Now, what is impairment loss? Don't worry. It is overload of information. I am just giving you so that you remember this concept. Paintings will never be depreciated or will never be amortized. Rather, it will be checked for any impairment loss. Sir, what is impairment loss? I will just give you a brief explanation so that you understand. Impairment loss is nothing but you purchase this Ravi Verma painting for 1 crore. Now, 5 years has gone. Now, you try to go and sell this Ravi Verma painting which was 1 crore in the market. And in the market, it is now being asked for 50 lakh rupees. How much you purchased for? 1 crore. Now, how much it is asked for? 50 lakh. Why? Sir, you told painting will always go up, sir. Painting will always go up. But what you have done? You have kept it in your office, no? Background. Okay? While drinking coffee, you spilled the coffee. Now, what happened? Painting is still Ravi Verma's only. Ravi Verma painting, but it needs a professional cleaning to ensure that original painting remains as it is, but that coffee stains come out. Correct? But that needs professional help. That is why when you try and go sell in the market, the price has fallen down to 50 lakhs. This price, which has fallen down from 1 crore, is called as impairment loss. It is called as impairment loss. This is an example I am giving you. There might be various reasons for impairment loss. There might be like this. Ravi Verma painting, now everybody, you had purchased it for 1 crore. Now in the entire country, you are one of the richest. Nobody is there to purchase. At max, it will go for 50 lakhs. Just giving example. Assume it. So, the price at which you purchased, and if you try to go and sell it in the market, what is the price it will fetch? If it is fetching more than what you have purchased, then no impairment loss. Sir, then is there impairment gain? Nothing, sir. No impairment gain, no impairment loss. You will continue to value that asset at 1 crore only. ಅಂದ್ರೆ ಅದರ ಅರ್ಥ ಕಾಸ್ಟ್ ಪ್ರೈಸ್ ಮೇಲೆ ಹೋದ್ರೆ ನಿಮಗೆ ಸಂಬಂಧ ಇಲ್ಲ, ಪ್ರೈಸ್ ಕಡಿಮೆ ಆದ್ರೆ ಪ್ರಾಬ್ಲಮ್. Okay, so you purchased at 1 crore, market price is 1.5 crore, nothing doing. You purchased at 1 crore, market price is 50 lakh, impairment loss. Impairment loss. Am I clear? Everybody is understanding? Yeah? Okay. So that is end of your chapter. And so we completed almost, which all chapters we finished up? BRS is done, depreciation is done, your fundamental accounting process is done. Correct? I hope you guys are studying properly. Please revise it. Please don't neglect it as and when we complete the syllabus. So basic account and accounting concepts is done. The next chapter which we did was accounting process, that is also completed. Rectification of entries, journal entries. Then the next one was our BRS. Then the last one was our depreciation. Correct? Yes? So in the next class, we will be starting with the next chapter. Okay? So what is the next chapter? We'll briefly discuss, then we will wind up. So we completed this, This is 4 chapters are done. Now the next chapter is preparation of final accounts for sole proprietorship. So in this chapter, what we are going to do is, we are going to understand how books of accounts are prepared for proprietors. Clear? Yes. So, sir, what is that? What is different? What is the different? What we have learned till now? How different is that? Sir, no difference, sir. No difference. I'll tell you. Till now you have learned how to pass ledgers, post to ledgers. You have learned journalizing. Once you journalize, you post it to ledger. From ledger, you prepare trial balance. Right? These 3 things has been learned. Now, in this chapter, we are going to learn to prepare P&L balance sheet. Full circle mugibekala. First, you started with journal. You went to ledgers. From ledgers, trial balance. From trial balance, rectification. From rectification, again adjusted trial balance. You even prepared BRS. You even understood what is depreciation. Now what is the next? The next one is preparing P&L balance sheet. Clear? So in this chapter, we will be seeing how P&L and balance sheet is prepared. So what you have to do, sir? You have to do is, you have to revise journals, ledgers, trial balance, rectification, and adjusted trial balance. If you revise these things, it will be easy for you to understand the next chapter. So all I request is, please go home, try to revise your ledger concept, revise your journal entry concepts, revise your trial balance concepts. Rest, leave it on me. I will help you to understand how P&L, how balance sheet is prepared. That is my responsibility. What is your responsibility? Going and revising it. Nowadays, lot of accountability, correct or no? Yes, So what is your accountability? Go home, revise these things. What is my accountability? Ensuring that you understand this concept clearly without any difficulty. Am I right? Yes? Okay. So next chapter, we'll start with preparation of final accounts and sole proprietorship. Am I clear? Okay. Thank you guys. Let's wind it up for today because hardly 10 minutes are remaining and I don't think we can cover any major concept. So let's please wind up the classes and thank you everybody who has joined live. We'll see you in the next class. Thank you.